Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, May the 10th, the year 2019. Let's talk trading. Weekly wrap up. We've been talking about horizontal lines, particularly highs and lows this week. And when you're trading off of highs and lows is when you're always trading. Money and risk management must be used. And I hope you used it and used it well this week. There was a lot of volatility in some of the pairs. For the week, there's a bunch of open gaps. So here's a week where we didn't fill them all. In particular, we did not fill the euro yen. You can see this big gap down here. Now, there's another gap that I've learned about, stumbled across this week, where if the previous candles highs and lows don't cross, in other words, there's a gap here between the low of the previous candle and the high of the current, or vice versa. And I'm going to probably be working with that sometime soon, running some statistics, because it looked interesting. So I threw out a couple of small trades yesterday on 3 different pairs where they had some open gaps, the high-low open gaps. And I put the take profit at that gap to be filled, and I had 3 little winners. So I need to prove it with some statistics to see if it's actually worth pursuing. Yearly red, monthly red, weekly red, but you see we've got a green day today. Notice here's the previous day's midpoint. We opened above it, came down, didn't get near it, turned around, went green. So the bias of opening above the previous day is a long, proved to be profitable. And here you can see we opened above, went up, didn't make a new high, turned around, hit it, and crossed it. So in this case, you have to take profit. You can see it didn't make a new high. It's coming back down, exiting that wick zone. So just take the profit off the table when you can. Now, we're talking about highs and lows. The opening range here, this is for this week, day 1 of the week. There's the high, there's the low. See, we broke out of that range a bunch of times, including the day we entered it. And here's the first day of the year range. There's the high, there's the low. You see, we broke into it, hit the weekly open, turned around, and exited both of those low lines. So once again, just using these horizontal lines, it tells a story. You take the trade and you can make money. Now, of course, as a disclaimer, these videos for educational purposes only, and your results may vary, and I'm not responsible for your losses. It's just that simple. Looking at the opens, all red, as you can see, on the opening for the first trading day of the 5 months of 2019 so far. And for since June of last year, we're below those opens on the euro yen. And just remember, traders, I stick with this pair for a month or more in a row. You can apply these same ideas to the pairs that you trade, but I just do this, 1, because it's profitable, 2, it's so beginning traders, before you can juggle 3 balls, you only juggle 1. So before you can trade more than 1 pair, you have to be able, you master the 1, then you should be able to do the rest. So find a pair that you're comfortable trading and just stick with it. And the other reason is because you don't want to miss the opportunities. You know, the worst thing that could happen is say you trade the euro yen, and then for some reason you switch over to pound dollar, and then you just wait, and then you're fumbling around, and you look back and you missed the big runner on the euro yen that you would have caught if you were paying attention. So especially if you're starting out, just trade 1 pair. Inside bar, highs and lows. We pointed this out yesterday. It exited here. Today it came back in, exited off the top. Not much. What, about 9 pips, 60, 51. So you could have had up to 9 pip trade there. Once again, not a bad trade. I mean, if you make 9 pips a day, in a week you've made 45. That's nothing to sneeze about, depending on your trade size, of course. If you're trying to take $100 account to $1 million, well, yeah, then maybe you need more pips. But if you're reasonable and realistic, you're going to be happy with those 9 pip trades. Showing once again on the daily, we hit the previous day's high, simple high, low, and boom. See, no complicated math. I mean, yesterday's high print is yesterday's high print. Doesn't matter what time frame, that number doesn't change. I mean, we can switch the chart over to H1, and that high is going to be the same, yesterday's high. We can use H4. It's yesterday's high, still the same number. I mean, you can even go down to the 1-minute chart if you want. As soon as the data loads. And yesterday's high is still the same number. So that's why I like using these static high-low lines, because once they print, they don't change. Now, on the other hand, the daily H1 highest open, that can change throughout the course of the day. The monthly and weekly H1 highest opens can change. So those are dynamic lines. But we can still make profit, because until they change, they stay in the same place. So unless price goes up, makes it, and then opens higher, then this line is a line in the sand. So as it goes up, makes a high, and it comes back down, you can use this as an entry trigger. And it seems to work well. That's one of the reasons I came up with the whole lower, highest open, lowest open. Pivot traders, buy zone traders. Okay, we had a pivot below, so we didn't quite hit the short zone at all, but the long zone, buy zone paid off. In fact, we took out the missed pivot from yesterday. But you can see here, we came above the weekly open, but didn't close above it, tested it, turned around. So exiting out of this H1 wick zone, there was profit to be made. Rat zone traders, short red rat traders got cheese, long green rat traders got cheese, and just now getting more cheese. We missed today's pivot, took out yesterday's. And you can see here we took out this one, we took out that one today. But we missed it, the current pivot, one for today, and we've got 5 pivots missed for 2019 and 2 for 2018. So look for these pivots to be taken out. I think these might get taken out. We'll wait and see. Price action, 3 ball at the top, coming down. And if you're wondering about this skull, it's the training wheels price action. Some of you new to the channel, new to me, something I call idiot mode. If you're, some people have a really hard time learning because they're, I guess, challenged, but sometimes people are just idiots. So I set up this idiot mode. So if you go short when this says do not short, then you're an idiot. So this helps people know which way to trade. I have to laugh because there's a long story about that. But the funny thing is, it works. I mean, if you just have the lack of discipline, let's say, that you can't follow a trading plan, you know, if you got this big skull and telling you what to do or what not to do and you do it anyway, I mean, you know, it's like taking a shower and using a hair dryer that's plugged into the wall inside the shower. I mean, anyway, here we go. We're back into this wick zone here. You see here's the previous day's high where we just went right through it. Simple horizontal trade. Here we go. Randy real time, Larry live trading, as opposed to, you know, oh, this is Harry hindsight. Well, when you do the same thing day after day and then you show it, it's not hindsight. My favorite trading screen, or one of them, here showing you the monthly, weekly, daily, high, open, and low. And you can see here we had some nice trades off of that high and off of that low, which comprise the wick zone, the daily wick zone. But remember, this also has the weekly and the monthly. You can see here price came down through the peak of the bid, so we have selling going on. And for those of you who don't have this indicator that I wrote, you can hit F9 on your screen, and so you can see here, here's the valley of the ask. So for price to go up, it has to get above this 0.255, and there it goes. So now we have buying has just commenced. So now for selling to start, price is gonna have to come below the peak of the bid. That's just my take on it, but it seems to work. Einstein line, simple. This is when I started the platform. You can see here we crossed the upper Einstein, the buy line here, and there was profit to be made. But you can see here, looking at the wicks, if you didn't exit here and you didn't exit here, and maybe you didn't exit here, maybe you just don't want to take money off the table. I mean, the FOMO, fear of missing out. If you don't take this trade, this profit, you've got about 7 or 8 pips because you think there could be more. That's FOMO, fear of missing out. That's all you're doing. Don't do that. You don't know what's going to happen next. So maybe you take off part of the trade. Maybe you take off 80% of the trade and leave some to ride. But lock in the profit when you can. The range, we've got 181 for the week, 59 for the day. But we're below the average range by about 12 pips. But near enough. You can see here on the holo setup, there was a nice holo trade there. And then there was one here on that highest open. But you see here it dipped back in the lowest open, giving traders another opportunity. So that wraps it up for the week, fellow traders. I hope you've learned something with the high and low lines. I think next week I'm going to work with the open lines, giving you guys more horizontal line lessons because it's really simple. You can do it yourself. You don't really need indicators. You could just plot lines, horizontal lines the hard way, especially if you're only trading one pair. So I hope you all have a great weekend, nice safe weekend. Come back next week. Oh, remember, if you're new, subscribe to my YouTube channel and hit the bell here so whenever I put out a new video, you get to know it. I always forget to say it. And also, if you're on no, let's see, is it Quora? No. No, it's not Quora. I went over to let's see. Hold on just a second. If you're on Reddit, do me a favor, go over there and give me the uptick, the thumbs up to up my karma. I'd appreciate it. And when you come back next week to trade, just remember, it's not what you trade, it's how you trade it. So let's all drain the banks.